Hello and welcome. My name is Joe O'Mara. I'm the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined today by Gary Rothschild, who is the head of aviation at Apollo Global Management, and he's also the CEO of Merx Aviation. Gary, it's great to have you with us today. We're recording this on the second week of December. First off, before we get going, Gary, it would be useful just to tell anyone watching, most will know, right, but a little bit about Apollo and Merx, because I think you'll be able to give us some really great insights given the breadth you have across the sector.
Sure. First of all, thanks for taking the time, and I'm honored to be speaking with you all. So at Apollo, we have a broad and diverse aviation investment platform. Right, I'm lucky enough to sit on top of both the PK Air Finance, which is a business we recently acquired from about a year ago from GE, which is our aviation lending business, direct lending, where we do secured lending to lessors and directly to airlines, obviously backed by the aircraft themselves. For the last 8+ years, I was able to run Merx Aviation, which is the leasing platform that sits on the Apollo platform. We built up over 100 portfolio of over 100 aircraft, or currently right now invested in about close to $6 billion worth of assets during that time. It's predominantly a narrow body fleet presently, but in addition to the leasing and direct lending platform across Apollo, we have the ability to invest up and down the capital stack in aviation. So we have a desk that obviously focuses on the capital markets, can take down bonds, unsecured, as well as at the private equity side to make investments into aviation related companies. So it's a unique and strong platform. And, from my perch, being able to sit on top of both a debt book and a leasing book, I think gives us unique perspectives onto what's going on currently in the market.
And looking at that market, Gary, we're now over 9 months into this pandemic that's had a huge impact on the space. Maybe looking at it from a geographical basis, so focusing across kind of Europe, America, Asia, where do we sit now and how has airline performance evolved over the course of the last 9 months?
Sure. I mean, RPKs are down approximately 70% year on year. So, not in a good place, right? Generally speaking across the industry. But to your question, to your point, it's, it obviously varies region by region geographically. So we know, the virus actually started, in China. And so that was the first one to be impacted, but it also the first to show recoveries. So where we sit in China now is there's very little reduction right now year on year as far as scheduled flights. Of course, that's not speaking anything about, number of passengers or yield, but you're starting to see real signs of recovery in China. There's other parts of Asia, in fact, in Southeast Asia that are still continuing to struggle. In fact, that region represents a good percentage of the arrears that we're dealing with on the Merx leasing platform currently now. But then moving on to Europe and the US, unfortunately, we have sort of second waves coming, which are going to continue to depress travel there. Europe being particularly sensitive with its reliance on international travel. So I think that's going to take a long while to recovery, the European market. With respect to, the performance of individual airlines, I think the best indicator of how the airline was doing was how they entered. So the stronger airlines from a balance sheet perspective, from a route network perspective, the ones who have been able to access capital, because right now performance is all about your liquidity, and also, your management team, because it's about accessing liquidity, your balance sheet, and managing cash burn. And so, what you're seeing is some of the stronger airlines are obviously, outperforming, and those are the ones that are going to get through this and probably end up being even in a better competitive position on the back end of this.
And on that airline side, we've seen huge levels of government support and probably a surprisingly few number because of that of airline formal restructurings. So we've seen a couple of Chapter 11s on the South American side. We've obviously seen Virgin Australia. Is your expectation that we're at the tip of the iceberg on that front? I mean, do you think we are going to see a lot more formal airline restructurings and bankruptcies over the coming months? Or how do you view that market evolving?
Well, so, you're right. The level of government support has been dramatic and pretty impressive. I think, the total is north of 140 billion worldwide, led by here in the US, the CARES Act with over $60 billion, Europe, approximately $40 billion, and Asia, about $30 billion of some form of state support, be it loans, equity injections, waivers on fees and taxes. And, that is obviously, buttressed a lot of the airlines. So surprisingly, we haven't even seen as many insolvencies in 2020 as we had in 2019. And certainly far less liquidations. Ironically, some of this support has actually, maybe deferred some, struggling airlines from actually having to restructure that they otherwise would, because A, there's government support, and B, frankly, the willingness of lessors and lenders to defer, arrears, not willing to take back aircraft in this environment. But obviously, there's a limit to the government support. And, there's a number of airlines that I think everybody is aware that are poised to file, right, either in court or out of court. So I certainly don't think we're done with some of these restructurings. But I wouldn't necessarily, I hope it's not that we've only seen the tip of the iceberg today. That I'd like to think that maybe we've, seen the top half of the iceberg, and there's only, the bottom half still to go.
And changing that then, as you're evaluating new transactions, and that could be with your PK hat on, with your Merx hat on, looking at opportunities. It's a challenging environment, as you say, but what are the metrics you're looking at when you're assessing, kind of evaluating a good credit in this environment, which must be challenging? What are you placing most credence on?
Well, I always just say that, evaluating a good credit in the aviation space is a relative term, right? Even the best airline credits, struggle to maintain an investment grade rating. Pre-pandemic, we were super focused on first underwriting the asset, right? And making sure we were in there to value the asset. And it was really a very technical review of the asset, and then underwriting the credit. And, that goes to the typical, review the balance sheet. And we have the benefit, of course, of sitting on one of the largest credit platforms in the world, and we can leverage that ability. But it was an asset underwrite first, then a credit underwrite. And then really a marrying of those two, right? Is this the right asset for that credit? How has it flown? What's the age of it? When the pandemic hit, that flipped on its head a little bit, because there is no real demand for aircraft by an airline that's not, to take in additional aircraft into their fleet. So right now it's much more of a focus on the credit at this point. We're still going to obviously do the technical work and make sure, we're in a good position relative to the asset, but you need to get a credit that's going to get you through this period. And that credit is really, do they have the liquidity? Or do they have the government support, as we just talked about? Do they have the systemic importance? And frankly, the quality of the management team to get through this pandemic and get out the other side. So, that's been a little bit of a change the way we view that. And, frankly, that's, I think, been, one of the impacts of this is that those airlines have continued access to, capital, while, the weaker airlines are really going to struggle in this environment and continue to struggle.
Maybe shifting onto the financing side, some of the comments out there now for those who are potentially looking at new transactions is the ability to secure debt. You guys have obviously a very large aviation lending platform. As you mentioned, you have an enormous platform behind that. What are your views on the debt markets currently for aviation companies? And that's both in terms of the capital markets and then just their ability to raise more traditional debt.
Right. So obviously the market's, challenged and dramatically different than it was a year ago. First taking a look at the bank market, many of the traditional lenders have, if they haven't altogether shut down, have, materially pulled back, right? And are only doing things on a relationship basis or to, top tier credits. And even to the extent they're lending, the structure of that debt is, taken on a lot different, right? So lower attachment points, faster amortization, shorter terms, and of course, wider spreads. In some cases, maybe double what we saw spreads pre-pandemic. The capital markets, you can break down into direct airline lending, and you've seen a ton of activity here in the US. And that's, I think, more a reflection on the liquidity in the market and the demand for yield and per paper. But if you have collateral and you have a good standing, if you will, in the market, I think you still have access as long as you have collateral to pledge. And a lot of the airlines are certainly running out of available collateral. And then, of course, you have the ABS market. And the ABS market has effectively shut down over the last 9 months. It had ramped up quite considerably over the last 5 years. Again, there's some talk about some deals coming to the market in the near term, but those will be, very structurally different as far as, rates, attachment points, and some documentation changes. Every cycle, every one of these provides lessons learned and documentation improvements, and those get implemented. And then as the cycle builds, they get relaxed and changed as well. And we saw sort of the more aggressive top of the market type ABS deals getting done immediately the pandemic. So I do think that market will open up again, but in a very different form.
And yeah, it is interesting on ABS, as you say. I think it was $22 billion of aircraft fund in the last 3 years, a hugely important channel. It does seem that, and you mentioned that wall of liquidity that's still out there trying to find a home. Your expectation on timing for that market, obviously in 08, 09, it probably shut for 3 or 4 years before coming back in a real way. When do you see an ABS market opening up in a real way again for aviation?
Well, so yeah, no, it shut down in the recession. It didn't open up again, the first one, because, that was a deal Merx did in the early 2013. So it was nearly 5 years of shutdown in that case. And I think it's an important market. Obviously, anything that provides more efficient financing and liquidity for investors ultimately filters its way down to better financing for the airlines, but it's not a direct link. And so the benefit was really, in the short term for the lessors, and a lot of lessors relied on it, particularly, some of the newer, smaller platforms that relied on it as an acquisition, a form of acquisition, and some of the larger platforms that relied on it, frankly, to sell aircraft and achieve higher purchase prices by selling through the equity tranches. So I think, in the period of the shutdown, alternative capital will flow in to help fund these acquisitions and to fund the lessors. And you see a lot of alternative asset managers trying to ramp up lending businesses. As we've discussed, we're very fortunate to have the PK franchise to already have a leg up on that effort. And so we think this is a real prime opportunity for us to, expand our business and expand our book. But the market, as you say, I think will reopen again. I don't think it'll take as long as it did last time, the 5 years. And I think that has a lot to do with liquidity and also the maturity of the market over the last few years, the number of investors and the understanding of it. But I do think it will take a number of years before you see similar, maybe, similarly structured and priced E notes or, deeply subordinated C tranches.
And shifting gears then, Gary, and looking at the OEM side, so the duopoly is there. It's tended to, wax and wane on production rates with demand, but this is something they haven't faced before. How do you see the pandemic impacting on their production rates? And how do you think they're going to help manage this downturn in the cycle?
Yeah, I mean, obviously negatively, right? I mean, the OEMs have had a massive, reduction in cash flow. Deliveries have either been canceled or pushed to the right. And it certainly also didn't help that, neither Embraer or Boeing came into the pandemic in the best position. Boeing, obviously the MAX issues, and Embraer coming out of, the merger that, fell apart as in connection with the pandemic. So, those, delivery are going to be reduced, and production has to ramp down accordingly. One of the nice things about the aviation market, from this perspective, is certainly the quasi duopoly that exists. So they have the ability to better match, the supply of the aircraft to the demand. Unlike, let's say, what we've seen in other crises with, for instance, shipping, where there's a large number of producers, and in order they would just continue to produce and manufacture vessels despite the lack of demand, flooding the market, depressing prices. So that's not in the interest, obviously, of the OEMs here. And I think they'll be able to better calibrate deliveries and production to the demand.
And on the metal side, how do you see this crisis impacting in relation to aircraft types and retirements? And how does that link in to the aviation finance side? Again, you guys have a really good picture on this, both on the lending side and the lessor side. How do you see this impacting on particular aircraft types?
Yeah, I mean, obviously, there's a huge supply-demand imbalance, and it will accelerate retirements of certain types, in a faster way. We've seen some of this already with, Delta announced they were getting rid of their aging 777 fleet. American, they're moving away from the Airbus A330 CO fleet. So definitely, wide bodies and older wide bodies, we'll see it, and you'll start seeing further retirements of last in line and older narrow bodies of the current generation. Buttressed a little bit by the uptick what we've seen in demand in the freighter market. So some types of aircraft, of course, have a afterlife as freighters in the conversion, and so that some of that feedstock now is going to certainly move into the freighter market. But overall, there is nothing about if you look out and you see demand maybe only reaching flight traffic 2019 levels, 2023, 2024, 2022, wherever it may be, there's just an oversupply of aircraft, therefore. And so that's going to lead to quicker retirements of aircraft across the board. That's just going to continue, I think, the focus that a lot of financiers have on, the asset, the right asset, newer in production assets, being wary of wide bodies, and certainly taking any, non-recourse balloon risk on wide bodies. I think that's going to be, one of the changes that we see coming out of this market.
And are you making any fundamental changes to your strategy in relation to the types of aircraft you're looking at pre and post pandemic?
Yes, I mean, certainly, right? From the the leasing side, we've always been somewhat agnostic as to the asset, both the type and the age, but very disciplined. So while we have bought wide bodies in the past and regional jets, you'll see our fleet today is almost entirely narrow body. And that's because we thought things were getting mispriced as far as the risk in certain aircraft types. And, interestingly, I think even more so than credit, that has proven to be the first line of defense or credit loss mitigant in this market. Having the right asset at the airline is what's kept some of our aircraft in place and still being paid upon, rather than, either getting rejected or being forced to take, massive deferrals or write-downs. So, underwriting the right asset and again, combined with the right credit, and focusing on, narrow body, or if you're going to take a wide body, making sure that you're in a position where that, that credit is going to perform. Similarly on the debt side, right? The strategy has changed somewhat where, we're able to, and I think it's prudent to be going in at a lower attachment point, but also amortizing quickly. Taking a significant balloon on an aircraft in today's market, isn't what the market is. There's no one doing it, so we don't need to be out at the end of the plank on that. I think our benefit of our platform is we are a metal investor, as opposed to some of the other traditional. So we will take a balloon, and we will be more aggressive than I think just about anybody else out there. But I think the days of seeing a very, very significant balloon on an older wide body aircraft are a little bit in the rearview mirror.
And moving then maybe to opportunity, we obviously have a dislocation and distress market that will give opportunities out there. You talked earlier about the ability to grow your book, grow your market. What opportunities are out there in this environment that you've seen already or that you might expect to see over the coming months?
Right. So obviously distress creates opportunity, right? And what's critical is, we've been involved in our management team, gone through a number of cycles. And in aviation in particular, I think that knowledge and experience is key. It really is a barrier to entry because it takes a long time to develop the technical expertise and the relationship to be able to really navigate, particularly when you're investing in the equity or, in the metal of the aircraft. So we're poised to take advantage of that stress. And of course, we sit on a platform at Apollo that is very experienced and very comfortable with distressed investment. So, by no means are we running for the hills in this environment. And as I said, it's giving us an opportunity to, I think, invest to better counterparties at better returns. And so how have we seen this change? For us, we were never very competitive in the new aircraft sale leaseback market. The cost of capital and where some of those lease rate factors were being driven in in the implied returns on those transactions didn't meet our return hurdles. And in fact, we didn't think that was necessarily the best risk return that was available in the market. What we've seen, however, since the pandemic is a big switch from where our opportunities are coming from. Where prior to the pandemic, we probably saw 80% of our opportunities in the secondary market, buying from other lessors, and maybe 20% direct sale leaseback opportunities. And again, typically midlife aircraft, not new deliveries. Now that flipped. So I would say, about 80% of our opportunities are frankly directly sale leaseback with airlines and the remainder secondary market. And I think that we also now have the opportunity to move into the new aircraft space because of the imbalance between supply and demand and the pullback of some of the financing, some of the challenged balance sheets of some of the other lessors. As these aircraft get ramped up, as new deliveries come in, as the MAX gets ramped up and redelivered, I think there will be some opportunities for us to find new sale leasebacks that we think are good risk reward and meet our return hurdles.
And can you see that leading to maybe transformative change in aviation finance? If you look at a market that's become more fragmented, do you see that contracting, the number of lessors that are out there? Do you see the percentage of leased aircraft fundamentally increasing post this? Do you think there's transformative change coming into aviation finance out of where we sit now?
I think there's some transformative changes going on right now, and we've talked about some of the way that the parameters of these financings are moving, and certainly the rates. But whether it's transformative or transitory remains to be seen, right? As the market recovers, the vaccine is obviously positive news. There will be some market participants that come into here and establish a foothold. There'll be some that exit. One of the changes I'd like to see, and maybe it's not transformative, more aspirational, is, requiring more airlines to, pay maintenance reserves. We've seen a lot of the pain that's come out of these restructurings is, in many cases, not really in the reduction of rent that you're forced to, take in this environment, but the lessor having to step up and pay for maintenance that's been run off their aircraft already. The top-up obligation that's coming down the road. And sometimes that's equally, if not more painful than the changes in the rent. So I think the acknowledgement and the importance of that, of the proper security package, I'd like to, maybe I'll put that in the aspirational category.
We can live in hope, Gary. Looking at maybe the investors that will come to the space, you mentioned earlier the maturity of the market, and we've had a widening of the investor base. Into ABS and E-notes or tapping that unsecured piece. Where do you see the funding coming from over the medium term now? Is it investors that have been in aviation already? Or you think, you mentioned that distress driving opportunity. Will there be new money coming at the space to fund it over the coming years?
I think both. I mean, a lot of the money, because there is a little bit of barrier to entry, will come from current participants, and some of those current participants expanding their platforms, or digging in, with, and providing additional capital the way, we're looking to do certainly at Apollo. But you will see certainly some new entrants and people looking to, acquire a platform, both in leasing and for debt. I think what you'll see is, because of what we talked about, the unique skill and knowledge that you need to manage these assets, I think you'll see some of these people come in, and you'll see some of these people, get out pretty quickly, and some of them will, of course, get burned. We've seen this in every cycle. Some of the, we've seen it out of the other cycles as well, that people have come in, they've established a platform, and, and now are in it for the longer haul. So I do think you'll see it, new capital come in, but I think most of the funding will come from people that already have some knowledge and some experience, are already involved in the market, if you will.
And just in closing then, Gary, as you look out into 2021, this could be a dangerous question, how optimistic or otherwise are you? So when you think of where we are and where we're going to, what are your optimism levels?
So I'm going to, talk about it from two different sides, I guess. I think we are still somewhat in the beginning of some of the distress in the market, right? Winter is coming. We have an uptick in the virus in many cases. Super positive news on the vaccine, but that's going to take a Herculean effort to sort of produce it and distribute it and, get it into the arms of people worldwide. And ultimately it has to get into people worldwide, because if certain jurisdictions don't have it, international travel really can't happen, right? So I think we're a ways away. In the winter, as we know, is is seasonal. Aviation is seasonal, and winter is a struggle. It is a tough time. So I do think in these losses and these loss of revenues, have happened. They're not going to be recovered. The airlines' balance sheets are, certainly extremely burdened, and it hasn't flown through yet all the way through, necessarily the lessors and then to the banks. Right. And so I do think we're going to continue to see distress, not just in the airlines, but through the lessors and through the bank markets. But that being said, for ourselves at Merx and PK and across Apollo, that obviously presents unique opportunities. And so I am optimistic about, making good investments. I'm optimistic about continuing to support our airline customers in ways, with both financings and restructurings that are, potentially win-win. So I do think, as I said, a little bit bullish on our opportunities and where we are. In fact, very bullish on that, but probably a little bearish on, I don't think we're sort of, rounded the corner yet on the distress in our space.
Gary, I would like to thank you very much for what was a really, really insightful discussion. I'd like to wish you and Merx and Apollo and PK all the best over 2021. Thanks for talking to us today.
Back to you as well. Thanks.